we have.
Yes. Okay, so I think most of my guests here need no introduction. We had the MC just very briefly introduce them earlier. So I think we just jump right in. So first of all, good morning, everyone. Welcome to the investor panel at Disrupt. My name is Kristie, and I am a venture capital reporter with Deal Street Asia. Deal Street Asia is a Nikkei and Financial Times-backed publication. We cover private equity and venture capital in Southeast Asia, India, and more recently in China as well. So the title of this panel is called Cash to Scale. But as I was preparing for this panel, I realized that Pakistan actually has a lot of pre-seed and seed startups. Can I just have a show of hands in the room? How many of you are in the pre-seed seed stage? Okay. How many of you are Series A? How many are investors? And what are the rest of you doing? What are you guys doing? Okay, anyway, just how many of you are thinking of starting your own startup? Okay, cool. That's the majority of you. Very good. So as I mentioned, we've got a lot of early stage, really early stage startups in Pakistan. So to me, the question I think is really about, finding the cash before you can scale. So no cash, no scale, basically. So there are three aspects I want to cover today. Number one, attracting capital. Number two, attracting the right type of capital. And then number three, how to scale. So the first question is for attracting capital, in terms of fundraising landscape, how do you see the fundraising landscape look like at the moment? Maybe Misbah, I believe you've been in the scene in Pakistan for a pretty long time. How long has I2I been around?
So I2I has been around for the last 8 years. And we've been working mostly on the accelerator side with startups, but one of the reasons why we decided to set up the fund is because we saw a gap in funding. And so a very key component of success for startups is how much funding they get and what kind of investors they get. So I think that has been a challenge, but like as Jahan said in her opening, we've come a really long way, and so things are changing, which is why so many of us are here as investors, excited about what's happening, but it has been a challenge in terms of what we've seen, especially for the last 8 years.
But in the last 1 year, Tom, you've been here for the last 1 year. You made your first investment, I believe, in Sasa Ticket. In the last 1 year, how has the fundraising challenge or do you think there's enough capital coming into the market, or do you think more capital should be entering the market?
Yeah, Kristie, it's great to be back, to see you again, and in fact, first of all, I'm delighted to be back. The attendance this year is amazing. So it was actually last year that we announced our first investment in Sasta Ticket, and this year we have our second investment, Airlift. So I think you're going to hear a lot more about Airlift later during this conference. But I think from our standpoint, the fundraising environment in Pakistan is only going to get better. So last year, when I came, I know I met a lot of people, and they said, Tom, you got to come back. And I said, we're definitely going to come back, and we are. So we've now set up, we've actually launched our fund, Fatima Gobi Ventures. We've made our second investment, and I'm delighted to let everyone know that we've got more coming. And I think, at least Gobi represents probably the tip of the iceberg. I think I always believe that demographics is destiny. And I know one of the earlier speakers said we shouldn't just look at people as demographics, but from an investment standpoint, we do. And the numbers here are extremely favorable. And I think this is a story that's going to get out very soon, the Pakistani growth story. So for all the startups out there, the capital is going to start coming in.
But where are the gaps right now? Maybe, Bernhard, you can take this in terms of fundraising. I mean, everyone says that fundraising is challenging for a lot of startups. What are the gaps? What are the challenges? I mean, has there been any improvement at all?
Hopefully everybody can hear me. I would start a bit earlier in terms of what are the challenges. And Rabil and I, in terms of Samayaka, we've done 6 investments. We started basically discussions with, in particular international capital providers in 2016 or 15. So since then, a lot has happened. Our thesis, and there I completely agree with what Thomas said some seconds ago. Demographics are there. For me, the simple question was as simple as for China in the 90s, will it be bigger 20 years later or will it not be bigger? And for Pakistan, the answer is pretty clear. It will be bigger. So that's an easy one. But it's an uphill battle, to be very honest. You cannot build companies, and in particular 100 million plus, or even unicorn companies with one or two players in an ecosystem. So I think in terms of what we need to do is first we all need to work together, shaping the ecosystem of Pakistan and working together. That's number one. Number two is spreading the story, creating success stories, and raising the international profile of the ecosystem and of the country, because that's the uphill battle that we need to win. And we can only do it with success stories.
But you sit out in Austria. I think, Tom, you fly a lot. I mean, what is the external perception of Pakistan when you tell people that, you've got a Pakistan-focused fund, that you are looking to invest in Pakistan? What are the perceptions that people have of the market right now?
I can maybe start. What we refer to still, and it becomes better because more and more people tell the story, but it's a perception-reality gap. If you come to the country, you see completely different things to what is on the one hand prejudice, and on the other hand what is in media, in international media in particular, and that's around what happened basically around 10 years ago. What we do, and there's a good example, we brought in our first summit in May a couple of international potential investors, both from the VC side, from the family office side, and I quote the second in command for Lakestar, that's one of the most successful European VC growth funds, Michael. He came to the country and he believed that he will see something, and don't get me wrong, I just quote him, he believed that he sees something that is more medieval ages, so something that happened really a couple of centuries ago, and he was very positively surprised because he didn't expect it when he came here. So what we need to do is show what Pakistan has to offer and create success stories to overcome this perception which is not in line with reality.
But maybe to you, Tom, I mean, in terms of, okay, since we're on this discussion about perception, right? Like, why, if I am from the US, I've invested in many other international markets, why invest in Pakistan over another frontier emerging market like Bangladesh or Indonesia or Malaysia? Why Pakistan?
Yeah, again, I don't know what US LPs are thinking, and most of the times I think they're wrong. So I can tell you what I'm thinking and what Gobi thinks. I mean, when I look at Pakistan, I see a market of about 220 million people, unbelievable entrepreneurial talent that's been around the world, people that are now coming back. These are the same patterns we saw in China. So from a Gobi standpoint, a Fatima Gobi venture standpoint, I think the closest comp for Pakistan for us would be Indonesia. Okay. And if you remember, I mean, 5 years ago in Indonesia, nobody wanted to invest in Indonesia. I mean, even the Singaporeans didn't want to invest in Indonesia, right? Everybody was rushing into China. Again, so this is where sometimes perception and reality, it takes people with the guts, willing to take the risks, who can identify opportunities earlier than other people. And frankly, that's where the rewards go to. I mean, everybody keeps talking about, risk and reward always goes together, right? And when I look at Pakistan, I actually don't see that much risk. I see a lot of reward. You look at Indonesia. Indonesia's got about 260 million people. Pakistan, roughly 220. Yeah, Indonesia's bigger now from a GDP standpoint. But from what I understand, Pakistan was like China in the early days. A lot of the economy is not officially reported. So that GDP number is probably a lot bigger than we give it credit for. And I think all the conditions are here for liftoff. And so I think all the people here on this panel, I mean, we're believers already. And in my mind, if Indonesia can create 10 unicorns, there's no reason why Pakistan cannot create 5, I think, in the next 5 years. There's absolutely no reason.
Can I just add to that? And I really love the example of Indonesia, because that's also from our perspective where we really see that there's a lot of conclusions that you can draw from that. In terms of gaps, because I want also to answer to what Kristie says, we have most of the ingredients there. The point where we see that some steps need to happen is number one, but this is typical for a not so mature ecosystem, serial entrepreneurs. Mm-hmm. So there is more hand-holding required, and therefore what we really think and where we stand for is value-add capital. So it's not only capital, but it's also experience that you need to give, in particular in the early stages, not the Series B, but for sure in seed and to some extent also in Series A. Mm-hmm. And the other thing is have an institutional approach and creating the trust also with best practice governance, international governance, to get international investors to jump over the certain hurdle which is still there and accept, looking into the risk profile. And here I again agree, and my personal feeling is I also do not see the risk that others see. Obviously there is some risk, there is everywhere some risk, that's fine. But people need to actively look and do their due diligence, and then they will find out for themselves. If they don't look, nothing will happen.
Can I just add? Just to add to that, I think what's also important is when you're outside and you don't know what the market is like. There are a lot of unknowns, and so most of us who are here have either come in and really try to understand what's happening, or have partnered with local players. Mm-hmm. So that's something that I would also say to people outside looking at Pakistan, is like, don't try a parachute approach. Come in, partner with people that have been on the ground, have been doing the work for a while, and also learn yourself, because every ecosystem is different. We're unique, absolutely, and we're still growing. We're still at an early stage, and there's a lot of moving parts right now, but there's a lot that already has been done. So rather than just parachute in, make an investment, parachute out, work with people like Gobi's done, for example, with Fatma Ventures. Work with people on the ground and really understand what there is to offer, but also the risks involved, so that you can then make better decisions, you can do due diligence better, and in the end have a better result as well.
Sorry, can I just make one, just add to that? Again, I think all the Pakistani ecosystem lacks right now, and we saw this in China. And again, that's why I think all the entrepreneurs in this room, you have an added responsibility, right? Not only to build a great company, not only to return the investments back to your investors, right? Return money back, but you also have the added responsibility of representing the country. And what I mean by that is, all that Pakistan lacks right now is what they call the hero effect. When that first icon comes out and gains kind of the media profile that will then attract the world's attention.
Like what Nadeem did for Gojek.
Exactly right. That will act as a catalyst, not only for capital, it will also, you will then serve as an inspiration for countless of other generations, maybe younger people now sitting in the room who will look up to you. And that's a very powerful, and I think that's very exciting. And I think everyone in this room should be accepting that challenge.
I mean, since you talked, yes, let's do this. But in terms of, deal quality, founder quality, where does Pakistan stand right now? Maybe Jonas, do you want to have a go at that? I'm sure you've met a lot of founders in Southeast Asia as well. You spent some time in Singapore, in Vietnam. Reality check, where does Pakistan stand as of now?
That's a very loaded question.
No pressure.
No pressure. Yeah. No, but so, a little bit of background, maybe 2-3 sentences, but I've been coming to Pakistan now for about 3 or 4 years, and this is probably my at least 15th, maybe 20th trip. So I spent a lot of time here, but I also spent a lot of time in Vietnam. And actually, I moved to Singapore 10 years ago when, as you probably remember, Singapore's startup scene was actually nothing. So the question of where are Pakistani startup founders right now globally, I think it's always a function of where is the ecosystem globally and locally. So 4 years ago, there was even here not seed stage deals. There were no seed stage deals, so how do you actually learn how to even build seed stage companies? How do you get to the next level? So now we've had a couple of success stories, at least from a perspective of raising a seed round, raising a Series A round. Obviously, as a Baikia investor, we're very, very biased, but that was a big round. Now we have Airlift with a big round. We have Sasta Tickets. We have Cheetah. We have a lot of companies now which have kind of reached the Series A stage, which is great. Now the next step is we need to have companies which reach the Series B stage, because that again is a different game. And so that takes founders who actually can step up and who actually reach that level. And so I think what we're seeing is that fortunately we have more and more good early stage founders at this kind of seed stage, but we need to make sure that as an ecosystem overall, both the supply of startups and the capital side, that they kind of grow together, and that way that we build founders who can also take startups all the way through B, C, D, all the way to an exit potentially.
So are there particular areas that you think founders can improve in?
I think so there are two areas that are quite difficult as you scale up. One is actually purely on the financial side of things, so understanding how do deals actually work, how do funds actually work? Why do VCs actually need 10x returns in early stage and not just 20% or 30% like other funds, because this risk-reward thing. So this basic understanding of how does the whole governance, fund structuring, investment structuring, how do all of those pieces work? I think that's one thing where over time the ecosystem will learn more, but where there's still some lack. However, the second thing is even more important, because investment is just fuel to build companies, and the company building part, as you grow organizations, when you're not leading 5 of your friends from university anymore, but when you hit 20 people, when you hit 100 people, when you hit 500 people, the entire way how you manage and build organizations becomes very different. And if you never had the chance to either see it as being an employee of a big successful organization or a founder who has gone through that journey, then it's very difficult, because you at best have theoretical knowledge. So those, I think, are two big areas where over the next few years, as the ecosystem matures, we're going to see a lot of development and advances.
I'm just going to jump over to Meenah. I think I'm not so sure whether most of our audience here is familiar with Caravan VC, because they are quite a new VC. Yeah. But I mean, touching on Jonas' point about bridging this kind of information gap in the ecosystem about what it means to take VC money, valuations, investors. I mean, what are you guys doing in this area, and how are you trying to bridge this particular gap?
Sure. So first of all, let me just say, I do believe there's a big need gap for more knowledge around the fundraising value chains on the entrepreneur side. And to be very honest, there was this knowledge gap even on the investor side up until maybe a couple of years ago, right? So I've personally been working in this ecosystem now for 5 years, which means I've been in this ecosystem since that first wave of angel investors that got burned, and the second wave of angel investors, and then finally family offices and corporate VCs, and now professional VCs. And so we've seen that knowledge kind of develop within the investment fundraising value chain. And there is still a huge gap on the startup side. I'll still get a startup call me and say, I've heard that I have to give up 30% equity every round I raise, without really understanding what that even means. We'll get startups calling us saying they have no idea how valuations happen. They don't even have the first understanding. And that's where intermediaries come in and support organizations, which is also something that's really improving rapidly. The government's put some money in. There's a lot of new players that have joined over the last year. And so we're seeing things improve on that side of things. Overall, I think because of this lack of information, especially on the startup side, we are seeing some exploitative deals happen as well, which is not very good for the ecosystem, but it's good for a steeper learning curve overall.
Are there any particular red flags? I think Misbah, 1 year ago, I remember you and Kalsum actually brought up this particular point. I mean, have we improved since then? And what kind of red flags should any of the founders here look out for when, they're a first-time founder, they're speaking to various investors? What are the red flags that they should, if they say something, we should get your antenna up and say
I think the situation has improved, but there will always be people looking to exploit relatively new entrants in the market, right? And there will always be people exercising power because they're writing the check. So I think what founders need to do is understand what they're doing, understand their own business model, and see where the gaps are in terms of not just money, but what else can an investor bring to them. I think shared values, and we mentioned this last time as well, shared values are really, really important because you are going to have that investor with you for a very long time, and you're going to build your enterprise together. So you should be looking, it's kind of like getting into a relationship, right? Before you decide to marry someone, you actually get to know them really well in most cases. And so that's what you should be.
Not really in most cases in Pakistan.
Yeah, I guess Pakistan is unique that way. But I just think that, so one thing is to understand what you're looking for in an investor. Ask people. There are, like Meenah said, there are a lot of people in the support system that are intermediaries that will be happy to sit down with you and help you understand and navigate that. But also, I think, know your own business. You have to start to understand what value your business can bring. And when you're sitting down with an investor, be ready to negotiate a little bit. I think we've seen stories where founders get excited because a check is potentially coming through and they give away a lot because they're not sure of how much to negotiate, or they don't want to lose that investor. So I think it's about understanding your own business model, understanding what values you share with the investor and what more they can bring to the table. Thankfully now, because of the growth of the ecosystem more broadly and several investors coming in, more people are also coming into the space, but the knowledge has increased as well. So there are examples that you can look at and say, I don't want to get stuck like so-and-so did at an early stage, or I want the kind of investors that another startup has been able to attract. So just learn from each other. There's a lot that's happening right now where you can access knowledge, access people like us, others in the ecosystem. So I think those are the two things that I would say, that you should actually keep in mind.
Yeah. If I can just also add, there's this scarcity mindset overall as a society that we have, which is not just about fundraising or the startup ecosystem, but overall. But even within this ecosystem, a lot of, especially young founders and first-time fundraisers, when they go out with that scarcity mindset, which really puts them at a disadvantage because they constantly, and a lot of startups, by the way, wait until they're desperate before they start to raise, right? So your burn rate is so high, you're about to die in 2 months, and most VCs in Pakistan will take 6 months to write you a check, right? Which means you're getting more and more and more desperate, which means there's a higher chance that you'll get exploited. So understanding even the timelines that VCs will take before money will actually hit your account, understanding that things can fall through the cracks at any time. And so you're the one who needs to be strategically aligning your fundraising journey in a way that you don't fall into that desperate situation, I think is really important.
Is it ever too early to think about follow-on funding and the state of the valuation? I don't know, any one of you?
I'll take a slightly controversial view here. As an investor, of course, I would always say, keep raising, keep increasing the valuation, because the feel-good is very nice. But what also you have to understand is that fundraising is very, very distracting. It's very, very time-consuming, and back to the point that you made, if you wait till 2 months before you run out of money, then obviously the chances of you succeeding are very slim. So there is one school of thought that says always be raising, especially when you don't need the money, because then you've got the power. However, what you also need to realize is that if you're spending all of this time raising, if you're spending all of this time at different conferences, at different events trying to hustle on the capital side, at the end of the day, capital is just meant to be fuel to fuel the growth. So at some point you also need to focus on building the business. So that's kind of the balance I think that founders need to get right.
Thank you, Jonas. I completely agree. I think on the one hand, it is the distraction element, which you keep in mind. On the other hand, I think it's, and that's something that resonates then also on the investor side, you need to have a plan of money that you need, and this should drive, obviously, your funding strategy, both from a timing but also from a volume perspective, and not the other way around. Obviously, if something opportunistic comes up, there is nothing wrong about it. But Kristie, in the preparation of this event, asked a good question that I would now maybe throw in, which is you asked basically, in particular when it comes to Pakistan and the funding situation, how do we feel about a global economic downturn?
Yes.
And maybe a shortage on liquidity, and I thought a bit about it, and I think I have an answer to it. Number one is if there's really
for context, the context. So there was a pre-interview, and the question was basically in the context of the global economic slowdown. I think everyone knows that winter is coming. And for a fund like Samarika, which is a Pakistan-focused fund, it's only focused on one market. Do they, potentially see some sort of liquidity crunch when the economic crisis, so-called, hits, and there may be a lack of capital actually flowing into the country? So maybe should we be taking a reality check basically on this? So now you may answer now.
Thank you for the context. Yeah. And I obviously made up my mind. There are different aspects. Number one is winter is somehow coming, but it's coming since years, depending on who is saying it. So it might take a bit more of time. But if it happens, it will hit the risky assets first. So what are the risky assets? Obviously venture capital and frontier and emerging markets. So being a VC in Pakistan would be on the high side of the problem. What can we do to mitigate that? Number one, obviously, at least from a fund perspective, raise as much as possible when winter is not there. And I think the ingredients, and we talked about it, are there. Number two is think smartly about, to some extent, the business models. But this is something that relates to Pakistan per se, and obviously the ecosystem and the funding situation, liquidity has improved. But to be honest, certain business models, be it super disruptive innovations that require hundreds of millions just to create a product, for that, Pakistan is not the right ecosystem. Also, certain B2C models might be much easier to start in the US than in Pakistan. It's about being able to manage the burn on the B2C side. And I think on the B2B side, it's easier, this topic. But on the other hand, and then I go back to what I said earlier, it is also about the ecosystem working closer together. And last but not least, what you see during winter is that less opportunities prove out to be winners, but they get more capital in the end.
Okay.
Can I just add to that quickly? Sorry. Yeah. I've been doing this for 17 years, and winter is always coming, okay? I mean, there hasn't been a time when people haven't said, oh, this is a bubble, it's going to end, VC. So look, if you've got a great plan, I actually believe when there's a short term from a public capital markets, it looks like there's a correction. For long-term guys like VCs, we're investing for 10 years. We don't really care about the short-term fluctuations. That's just noise from my standpoint. And so when public sentiment is bad, I think for you as an entrepreneur and for us as long-term investors, that's the best time to be deploying capital. And history has always proven that when sentiment is down and there's a scarcity of capital, that's when returns are the highest.
Okay.
So we, on our side at Laxon, we've done the same thing. What we did was we actually mapped out interest rate cycles in the developed central banks. And with that, you can trace a lag effect. So when we invest in a company, we're expecting peak funding. So I think Pakistan is now entering into a preliminary bubble of funding. And then obviously with every bubble, you're going to see a bit of a liquidity crunch. And so every time we invest in a company, we do a 5-year plan and plan their rounds linked with KPIs and growth. Because the idea is to basically avoid, as the rest of the panel has said, avoid basically liquidity crunch down the line. And so the whole idea is to traverse through this, navigate through this very tough time coming up ahead.
Yeah, since we're on you as well, I mean, Lexin, you're actually the only CVC that is on this panel. Maybe you can just delve a little bit into, what is Lexin's investment mandate? How do you value add as a CVC to the Pakistan startup community?
Sure. So there's actually a misconception. We're actually not a corporate venture capital.
Oh, okay.
Although we are backed by one of the largest corporations, their asset management arm, Lexin Investments.
Okay.
They're the main GP in the fund. But we are corporate in a way that we've raised money from 6 of the largest corporations in Pakistan. So the largest textile, largest pharma, construction, a lot of them are our investors. And so what we've created is a safe vehicle for these local industries to get a taste of venture capital, since it is a very high-risk asset class and they tend to be more traditional. And what we're doing is we're exposing them to these deals. Our mandate is, just like everyone here, we're pre-Series A fund. We identified a capital gap about a year ago, where there was a lot of early-stage money with high net worth individuals and angels active in the system, NICs, the governments, but there was no Series A, Series B money, which is changing now.
Right.
So we basically positioned ourselves in that gap where when a company was showing a network effect, or they were showing month-on-month revenue growth, that's where we would come in and basically then turn into their soundboard, give them enough runway for 24 to 36 months, and help them meet the milestones for that Series A and Series B, so on round.
Are there particular sectors that you're looking in? I mean, given the fact that you've got a number of corporates on your investor base.
So we're agnostic. It's a relatively small market, so we invest across the board. But what personally interests myself and the investment committee, I like limited business to consumer plays. Just my nature is not burn. I don't think, I think more from a building value perspective. So we like to go into the more B2B place, supply chain, digitization. Personally, our thesis is based on digitization of payments, because when you're investing, you have to look at multiple things. So it's the underlying protocol that's changing. So if I was, go back a few years ago, if it was a voice over IP protocol disruption, you'd be investing in things like WhatsApp or Skype. If it's the IPTV disruption, which is the previous industry I was in when I built a company in the US, an IPTV company, you want to invest in things like YouTube or Netflix. Right now, we're in the protocol for exchange of value and digitization of payments. Right. So the underlying, that disruption, and you may know it as cryptocurrency, Bitcoin, Litecoin, whatever the iterations are, but from our point of view, we look at it as the downstream impact, because the payment gateways is where the capital is flowing, and then they're going to need to generate economic activities. So platforms like Kareem, one of our portfolio companies, BookMe, these are basically platforms where they're creating efficiency, and there's value, and there's economic activity that's getting digitized. So that tends to be the core focus.
Okay. We had this chat earlier, Tom, about ecosystems. And you did mention earlier as well about how you think, Pakistan actually may see a lot of affinity with Indonesia. I mean, what other parallels do you see, or maybe even differences that perhaps Indonesia can't be replicated into Pakistan? What can you borrow and what can't you borrow, basically?
Yeah, no, I think when you look at just back to the maybe come back to the China example, and I know we were talking about this winter is coming. Just as a reference case for us, I mean, if everybody here in the room remembers, I mean, 08, 09 was a terrible time. I mean, you think back to where you were in 08, 09. And when we look back, actually, at just the China VC experience, because of that economic crisis, actually investors who had invested during that time period made the best returns. And the companies that could survive that and come out of that cycle are now household names that everybody's heard about. So again, back to that context, I thought Bernhard had a great point as well. Your question on is winter here, and who knows what's going to happen with the global environment. But again, the message I would have for entrepreneurs, and it's been proven again and again, is entrepreneurs who stick to what they're doing, build out real businesses. You'll find a way to raise the capital. It's always there, and the company, that's the real crucible. Whoever can come out of those times, end up building a lot of value.
I completely agree, and what Thomas said, winners will always get money. That is pretty clear. From an overall ecosystem, there are some winners, but there are others that and a lot of people will not win. That is pretty clear. But the learning can be then taken away to create a new winner. I think that is important. I think in terms of what you mentioned with other ecosystems, there's one point that I want to mention. Not only compared to Indonesia, but also to other ecosystems. It is really diaspora movement. So trained people, trained Pakistanis coming back to the country, sharing the knowledge, the experience, the international training, and combining it with a local understanding of society, of the ecosystem, of regulation, of politics. And this together is something that is very convincing. And I draw again to one of the questions that Kristie shared earlier, is whether it's more likely that, at least from a Samayaka perspective, that founders with international experience and background get funded than local, only locally grown founders. So my first answer is never say never. There is talent locally as well as internationally. But there is, at least now speaking only about Samayaka, our thesis is obviously to build bridges internationally and locally, work with international investors and experience, and bring it to the local ecosystem. So an understanding of what's happening outside of Pakistan is something that is maybe also beneficial for the founder itself, but is also helpful for us to work with the founder as our partner. And there is another element that comes in with diaspora movement, and it's just the best example and evidence of commitment. If someone comes back, he knows what he wants to do, and he is desperately trying to do it, and he shows this kind of commitment better than any kind of due diligence interview.
Okay, I'm going to pivot a little bit and talk about startup pitching. And this is actually for...
That was the perfect start to do that.
This is actually for everyone. What does a good startup pitch look like to you? Maybe you can just start from the end and then go down this way.
So I'm a little bit different. I don't look at the investment deck when I walk into a meeting on purpose, because it creates a bias in advance where I may, essentially have a previous bias. So I let the founder speak about the actual platform. And that's where you learn if the founder's committed, what their actual passion is. And that's really where the relationship starts to get built, as Misbah had said earlier, where you get a feel that this is the person you're going to be working with. And so then you want to hear them out. And it's just casual conversations. There's no structure. It's not an interview. It's really just to get to know them and see if they're the right fit. So it's a natural, easy pitch.
Okay. Meenah?
Sure. So, I mean, the horse gets your attention, but you bet on the jockey, right? So it comes down to the founders and whether they're able to convince us if they're the right people for that idea. There's three things that I think for any pitch, that even if it's just a 1-minute elevator pitch, what you have to convince an investor of is the size of the opportunity, your traction, and your strategic vision. So are you thinking big enough, especially if it's a VC, are you thinking big enough for the VC to be able to look at it in terms of the VC type of returns that we look for? Is the opportunity size big enough for us to get excited about this? And what have you done so far? So actually, this whole idea of investing or like more money actually going to people who've come back from outside of Pakistan, it's a little depressing when you think about it deeply. And like, I'm saying this because I've been on the startup side of the table for 4 years before the last 1 year that I've been on the other side of the table, right? And so I've worked a lot with local founders, and I've worked a lot with like absolute hustlers who are not from a privileged background, who've maybe never gone out of Pakistan. And even when they get into a conference, their visas get rejected, right? So like a lot of very gritty people. And yet, in the last 6 months, I personally have seen a lot of money go to people who come back from outside of Pakistan. But I think what it comes down to, at the end of the day, whether you've traveled outside, whether you haven't, whether you're completely homegrown, or whether you left like a cushy job in the Silicon Valley and came back, is the traction that you've been able to build, and whether you're able to convince us that you are, like you just said, moving back shows that commitment, but also being here and having done this, understanding your industry, being able to speak the language of whatever industry you're in, that also shows your commitment to the strategic vision that you're trying to sell. An absolute no-no, and that's also one of the reasons why more money we've seen in the last 6 months flow to people who come back from outside of Pakistan, is that unfortunately, for the most part, people who come back with external international exposure are just more professional. And that is very, very sad. Again, having worked with founders inside Pakistan for 4 years, that is very, very sad. But we'll see founders say they'll email us something tomorrow in the middle of due diligence and then not get back to you for the next 3 weeks. Mm-hmm. And these were founders who were saying they need money in the bank 2 weeks from now, right? So like very, very basic things like following up, like sending things through, like not getting defensive if somebody asks you a tough question. We've had founders change numbers from one call to the other. So like, and sometimes they'll actually report higher numbers in one call and then lower numbers in the second call and then higher numbers again in the third call. So like understanding what your story has to be before, and I'm not saying make up a story, I'm like your real genuine story before you start talking to an investor. Yeah. I think that's something that, whether it's a local founder or it's somebody returning from outside of Pakistan, that's what will really get the investor to trust you and trust the vision that you're trying to sell.
Jonas?
So I think I would agree with both of you that absolutely, I think what's happened is that pitch decks have become a little bit over-polished, and everybody is focusing on what are the 10 perfect slides for a pitch deck, do these 7 things and you'll get $10 million or whatever. The reality is pitch decks are actually just support to convey a story, and that story is what as an investor I'm interested in, and that story consists of a problem space, of opportunity size, the traction that you're showing that you actually are going to solve that problem. Now, the great thing from my perspective is that in markets like Pakistan or in Vietnam or Indonesia or China many years ago, you actually don't need to get that funky in terms of what kind of advanced problem you're solving, because the reality is, in these countries with 220 million consumers, all of us are struggling with basic problems. Mm-hmm. Mobility, getting around, getting food to your place, ordering stuff, buying a pack of cigarettes, buying medicine which isn't fake. These are actually kind of simple problems, but they're problems which are huge. And so as an investor, especially in these kind of geographies, I am very, very biased towards these kind of sectors which have massive impact where the fundamentals are very easy to understand, because that reduces risk. And risk in these markets is always big. So any way to reduce risk by showing, hey, everybody needs to move around. There's no question of demand for that. There's only a question, can you supply that at an attractive price point? That's kind of what I look for in pitches, for people to convince me of that.
So basically clarity about the problem and how you want to solve it.
And fundamentals.
Yes? Okay. Misbah?
Yeah, I think...
what about, no-nos? Things, I don't know whether you guys are open to sharing any horror stories. Things that, maybe they shouldn't do.
Yeah, so I think one of the things that, and I'll come to that in a second, but just to build on what everybody said so far, yes, it's really important to focus on the founders, which is what we do, absolutely. But sometimes a pitch deck is what your first point of contact is. So I wouldn't say you have to perfect it and 10 slides will get you $15 million. But I do think that you should spend a little bit of time on understanding how you're telling your story. And to Jonas's point, there are opportunities everywhere in a market like Pakistan. You don't really have to work so much to figure out what problem you're solving and what that size of that opportunity is. So do a little bit of homework. It doesn't have to be perfect, but it should be enough to get someone to look at and say, okay, this is interesting, I'll start a conversation. And then very quickly, that goes to what Faisal was saying, then it becomes about the founder. What is their vision? Who are they? How do they operate? Do they have the hustle and the grit? And how are they approaching this problem? So we invest in people, and people build ideas. And that's basically what we're actually looking for. In terms of no-nos, I think a lot of people think that, one more thing is do your homework on who you're approaching. Most of us have an open policy in terms of what we're doing, how we're looking at sectors, how we're looking at whether we're early stage, seed, what level, seed, pre-seed, later. So do a little bit of homework. I mean, very often we have people come to us and don't understand that a VC will come in a market like Pakistan when you've had some traction and something to show for it. As the market matures, you'll get to the point where, like in Silicon Valley, people are just funding ideas and you get millions just by scratching something on a napkin. Pakistan is not there yet. And I think we will get there at some point, but right now there is some competition to get attention of investors. So do a bit of homework in terms of what you're doing and what your value add is, but also understand that most VC investors will look for. So I think the point is also to understand that when you're actually approaching people, tell the truth. Be honest, be open. If you have challenges, talk about them. An investor will understand that it's not going to be a simple and easy ride. And sometimes I feel people think that they must come across as confident or must talk up a big game. But most investors who are doing this professionally will see through that, right? You may get away with one angel who maybe hasn't invested before. But those of us who are investing will be able to see through something that's not really real. Yeah. So be real, be true to yourself, be honest, and then just understand. Sorry, there's somebody.
Okay, we just move on to Bernhard. I mean, so Samarika, how many deals do you normally look through? I mean, in the last year, how many have you looked at? Any that have impressed you, or any particular, what basically advice to founders in terms of what they should do and shouldn't do.
Yeah, absolutely. And to be very honest, I don't really have the full number in mind because we get a lot of pitch decks every day. We have overall invested in 6. We are very closely looking at 5 to 6 at the moment with some very advanced, and you will hear something very shortly. But in terms of, and drawing back to what my fellow panelists have said, what should you do? Be authentic. I go back to Misbah. Go back to Jonas in the sense of know what you're doing, what's the opportunity, and give a bit of rationale. And also one question that you have asked, Kristie, it is really here in Pakistan not too difficult to find niches, because the niches are niches in a 220 million people country. Mm-hmm. So that's easy. And also explain why you do it, what's your background to it. And then I go once again back to Misbah, because that's very important. Know why you approach whom, and think about this approach and how you do it, and make up your plan first. We have a clear picture in mind of what we are looking for. We are not shy explaining that. We want appreciation from our partners and founders. They should see us also as partners and not as an ATM. If they do that, they should go to a bank. We are here for value-add capital, and value-add capital means we are here to help you in a lot of areas, and if you have appreciation for that, then come to us.
Tom.
Well, look, I think all the panels I think have been great today. I think just for me, for a no-no, I mean, if you're going to send me an email, make sure you address it to the right guy. don't put the wrong, yeah, right? I mean, how many of us have gotten that, right? So
It
I
happens
would
more
say,
often than you'd think.
yeah, and make sure you spell my name right at least. That would just at least show some, you cared enough about that. Just 2 points. I think some great discussions. First of all, I would encourage everybody in this room to come up with a term. In China, the diaspora effect really caught the imagination of the media when they called it the sea turtles. All the Chinese diaspora that decided to come back. That took a second iteration in Southeast Asia where they then played upon that and called it SEA capital, sea turtle, right, for Southeast Asia turtle.
Yep.
I'd encourage everyone in the room to come up with a name for this Pakistani diaspora. I mean, is there an animal here that comes? I don't know. I think you could come up with something, right?
What?
Oh, that's a good one.
Okay, there you go.
Pakistanis?
You got to write that down.
I don't understand the
Raveel
significance.
said that we should call them the Wapistanis because Wapis means to come back. So
All right, well, there you go.
Okay.
All
That's a
right,
good one.
okay, that's great.
Kristie, that's worth an article.
Yeah, that's
Yeah,
an
I
article.
know, that's worth an
Wapistanis.
article.
You
All
got
right,
the
let's do it.
exclusive on that. You better talk to him, right? And then the third point is the diaspora effect is very important. And look, even in China, Southeast Asia, returnees from overseas markets naturally will get the attention first. Okay? Now, that means, but do not give up hope. Okay? Because using China as an example, the first wave of entrepreneurs that got funding, went to Stanford, Harvard, came back, dressed really well, great presentation decks, and they got funding. But you got to think long term because remember, being an entrepreneur and being an early stage VC is long term. Think of everyone who built huge companies in China. It was actually the locals who did not study abroad. I mean, the perfect example is Jack Ma, right? He couldn't even get a job at McDonald's or KFC, and he never went abroad. So VC, we're supposed to also level the playing field, as Bernhard was saying.
Yeah.
As long as you have a great idea, our job is to make sure you get access to opportunity and to capital. So it doesn't matter what your background is, as long as you've got an idea. And of course, does it help if you're really smart and you've got credentials? Of course. But that doesn't mean you have to have it. I mean, and that's why early stage VC is so exciting, because you can compensate for that with your drive, your ability to create a team. I know that was a point as well. Look, a CEO founder sometimes spends his whole time fundraising. That's why having a team, someone's got to actually operate the business, is really important. But anyway, I just want to...
Yeah.
But just one thing to add to what Thomas said, because it's make the most out of what you have. You have heard now from the panel that sometimes it helps to be more professional, to maybe make use of someone who has been abroad, form a team, because then you can benefit from that as well. And something which is close to my heart is really that we all, as an ecosystem, think as a team, because it's on us to raise the brand of Pakistan.
Okay. All right, so I think we've come to the end of the panel. Thank you very much for joining me today.
Thank you.
Thank you very much.
Good,
Thanks.
Thank you.